Check it out. Stocks rebounding from yesterday's sell-off. The S&P 500 is up 12 points. The Nasdaq up 0.5%, and the Russell 2000 slightly higher on this Tuesday, December 2nd. Joining me now is Laffer Tengler, CEO and Chief Investment Officer, Nancy Tengler. Good to see you, Nancy. Before we get to the markets, your thoughts on investing in the next generation of Americans.
Oh,
Babies.
I love this. I love this idea. You know, I wrote a book on investing for women, and this is just a passion of mine. Get people involved early and young. I think it's one of the best pieces of news I've heard.
I think it's a great way to teach Americans, young people, about interest, capitalism. I love it. We'll get more later. So let's take a look at the Nasdaq. It's higher today, coming off the best week in 6 months after having the worst month since March. I know you're like going back and forth. Is this volatility, because that's what it is this the new normal or unexpected?
No, I don't think so. I mean, I think it's always unexpected, Lauren. Yeah. So, but I think what we had was a bunch of short sellers kind of talking their books, and so they drove the volatility. Then the computer programs, the algorithms read it, then the hedge funds jump in. But now what we're seeing is, even on bad news, at least a few minutes ago when I looked at Tesla, you know, we had some really negative comments out of Michael Burry and the stock's up. Yeah. So I think that tells you you're getting to the point of exhaustion from a selling standpoint. Last week was a nice bounce on low volume, kind of seasonal. I expect to see that we'll rally into the end of the year, but it may not happen until the second half of December.
The traditional Santa Claus rally. So the bears were tired, I guess, for the time being. There's a lot of talk about there potentially being an AI bubble. Your thoughts on that?
I wrote a piece called "The Bubble and Bubble Talk," hat tip to Dr. Ed Yardeni, I think, who coined the phrase. No, look, I mean, I was managing money in the 1990s. I've talked about it a lot on your air. This is not that. Back then, you had the drivers of capital appreciation. They were having negative earnings growth or decelerating earnings growth. That is not happening now. The drivers of capital appreciation in this environment are growing earnings about 20%. CapEx all decade in the 90s at a ferocious pace. We're just getting started. So I think the AI trade will transform into other things like quantum and robotics, and we will be there for that.
Physical AI. So this is not that. Your 5 for 2025. Those are the stocks in an equal weighted portfolio that you picked. They've outperformed the broader market year to date. Are you parting with any of these names for 2026? These were your winners for 2025.
Well, I'll tell you, they were revealed on this show, so that's important because I only give those ideas here.
To Charles.
Yes. And we own them in all of our other portfolios, but I have a new 6 for 26 that does not include any of them. One of the names did very poorly, ServiceNow, not for any fundamental problems at the company, just from some transitional narratives and things going on.
What about Broadcom? Are you keeping them? Because this stock has been a winner. They're helping Google make the chips that are training Gemini, which everybody is raving about. Are you keeping Broadcom?
We are, yeah.
Okay.
Yeah.
Okay. So this is your 6 for 2026. Why should investors own these stocks?
Walmart is the old economy company pivoting to new technology. They're moving to the Nasdaq. That's been our poster child because that's been our investing theme for 3 years. AMD is going to grow data center at 80%. Quant is building the grid. Tesla is the future of robotics and full self-driving, AI-driven technologies. CrowdStrike, cybersecurity, they report after the close. We expect a triple beat. And then DR Horton, I think housing's going to recover next year. So this is where you want to be.
A triple beat for CrowdStrike means beat on earnings, beat on revenue, and raise their outlook for the year. I love it.
Yeah.
Okay. And why do you like DR Horton?
Because we think housing's going to recover. This is a cheaper, it's $378,000 average home price. Southwest, Southeast, a little bit in the Midwest, so not in the trouble spots. And they did pretty well. They've been buying down mortgages for people, so we think they will continue to do that. Hope we get some regulatory relief for housing out of the White House.
I love how you have Walmart on here, because when you go to, I mean, what, 70% of the population lives within a few miles of a Walmart, so you think of them as a traditional physical brick and mortar, but they are an AI company. They have those symbiotic robots all over their warehouses.
50% of fulfillment was robotic and automation, and then their e-commerce business is still growing at 27%.
And Nancy, they're doing much of that in under 10 minutes. You order, they deliver. Nancy, thank you so much.
Thanks, Lauren.